Hello everyone, Stuart Heath here, CEO and founder of Harvard Grace Capital, with another post just of some data. I was fortunate enough to go to a conference this past week where some good folks put together a lot of data and reports based upon publicly available Census Bureau and Federal Reserve data. And it's just, it's tremendous. When you put it all together, and you can kind of make some conclusions. So I want to show you 4 charts about why this economy is continue to move forward in a bold way despite the current uncertainty that's going on that's making some people nervous. First, here's retail sales and spending, and you can see through the end of 2024, and you can see that last little tick right there, that it continued an uptrend, a new upward trend. It's 40% higher than the trend line from the previous 10 years leading up to the pandemic. So the pandemic, we got a lot of free money, started a lot of economic activity, which made people make more money in a lot of cases, and people are spending that money. Spending money is good. What about savings? This one's unbelievable to me. You look at this chart. This is a chart from the Federal Reserve on the amount of deposits that people have on hand on a per household level. It starts with the pandemic. It goes up. We are still at near record amounts of deposits at household level. People have money and they're spending money, but you can see from the line item, they're continuing to hang on to large amounts of cash. This is good. What's also good? A low delinquency rate. So this is the delinquency rate on single-family mortgages, and you can just look here. So here's the low spot here. We're almost at that. We're just slightly above that 2005 low mark. People are paying their bills. They're making money, they're spending money, they have money, and they're paying their bills. And one last chart. The reason things are really so good is that, due to those really low interest rates at the beginning of the pandemic, everybody refinanced their mortgages at those 3.5% and 4% rates. And so our debt service as a percentage of disposable income is just about as low as it has ever been. It's higher than the low point, but here's where we are, and you take your trend line back across this, it's lower than it has ever been. So what does all this mean? It means that the economy and most of the households in it are in really good shape. There's a little bit of uncertainty out here. The new administration is shaking things up. They're talking about firing government workers. They're talking about adding tariffs. They're talking about this, that, and the other. All of those things in the long term might turn out to be good. If you remember, he talked about tariffs in the first administration. Didn't very many of them really get put into place. It's a negotiating tactic. Anyway, this economy is going to continue to go strong into the future, and all of the data really looks strong. I would love to hear what you have to say about this. Thanks for watching.